Hi and welcome back to today's morning report on Thursday the 11th of June with me, Rich Pro Market Analyst at Tech Markets. Moving on to dollar yen now, and these moves in dollar yen over the last couple of days have been very interesting because we've seen this sharp move to the downside result in indicators coming sharply lower and giving a series of you've had a sell signal confirmed on the Stochastics and on bearish crossover on the MACD, and RSI has also sort of fallen away as well. But there's been a sharp rebound today as the dollar has gained ground again. Now the big question is this an opportunity to buy, or is this sort of backing the bulls once again, or is it an opportunity to sell? Now the interesting fact that I've noticed here is that I've got the Fibonacci levels on the hourly chart here, just showing that run higher that we've had. 1886 up towards 2585 was that run higher. The 50% of that move has been unwound. 2236, we saw the low coming in at 23, so just sort of a handful of pips above that. So you would say that that's 50%, forming pretty decent area of consolidation. Now what we've seen in the last few hours is that dollar yen has rallied, and it's rallying through already, or having a serious test of the resistance that sort of came in sort of 123.50 sort of area, 123.60, which was all these sort of reaction that we had. So that old support becomes new resistance, and that is around about where we're trading at the moment. So all these old reaction lows are going to be sort of an area of resistance. So exactly how dollar yen is up at these levels, because it's a series of sort of or overhead supply. So having broken through that sort of 38.2% fib level at 23.19, you'd argue that it should be there theoretically coming back up towards the 23.6% level at 2020. However, you do have this big overhead supply now around the levels at which it's trading. So it'll be very interesting to see if this rally does start to run out of steam. You've got the momentum indicators on the hourly chart that have just basically unwound. You've got that those MACD lines that are sort of now up towards neutral. And again, if that starts to sort of, if the price starts to consolidate around here, you could see the MACD line start to take. It's sort of up in the 60s now, so that's going reasonably well. So a few sort of mixed signals that you're getting from these hourly indicators, but certainly I think this resistance around 23.50 to towards 23.70 is a key area of testing area now. And there's a lot of overhead supply in that area that could well scupper this rebound that we've got. In terms of the moving averages on the hourly chart, certainly you'd say that they are still overhead. They've rolled over. This rally is just unwinding back towards them. So this could well be just a rebound in more of a corrective phase. And certainly if the daily momentum or anything to go by, it is a corrective phase now. So this resistance that it's trading at the moment, I think, is now a key test for this dollar yen chart for the outlook. If it starts to break through that and break above 20, then you could quite quickly see it up towards the test of the 24.60 level, which it got just before that those comments by Governor Kuroda, 24.60. So that would be an entire retracement of that move from yesterday. So I think that this resistance around here, where we're seeing dollar yen trading at the moment, is very important near term, and it could be very interesting today. Those retail sales for the States, 130, could easily have a big impact on this chart. Certainly the dollar strength today has been across the board. An extension of that if you see a positive number today, drag higher. So in terms of the support, you'd say 23.19, which is 8.2% fib level, and subsequently obviously below that you're looking at 22.42, which is the reaction low, 22.43. So lots to go on dollar yen today, and I wish you good luck in your trading, and I'll speak to you later, I think.